Everyone, welcome back to this YouTube channel today. In this video today, I want to share with you the top 5 mistakes beginners make in crypto trading and how you can avoid them. Top 5 mistakes that beginners make in crypto trading and how to avoid them. Cryptocurrency trading can be exciting and profitable, but it's also full of pitfalls for beginners. Not just for beginners, even for old-timers. Many new traders and old traders lose money because they make common mistakes that could be easily avoided with the right knowledge. In this video, I will break down the top 5 mistakes beginners make in cryptocurrency trading and how you can avoid them to maximize profits. Let's get started now. The number 1 mistake that they make is trading without a plan. So many beginners jump into trading without a solid strategy. They buy and sell based on hype, emotions, or social media tips, hoping to get rich quickly. How to avoid this mistake? Develop a trading plan that includes entry and exit strategies. That also includes risk management and profit targets. Stick to your plan and avoid emotional trading. Then also use technical and fundamental analysis to make informed decisions. Write down your trading rules and stick to them like a professional trader. Number 2 is ignoring risk management. New traders often risk too much on a single trade, thinking they found a sure win. When the market moves against them, they lose a large chunk of their capital. How do you avoid this? Never risk more than 1 to 2% or even 3% of your capital per trade. Always set a stop loss to limit your losses. And at the same time, diversify your investments to reduce your risk. The key to long-term success is protecting your capital, not just making big wins. Somebody said, investigate before you invest. So before you make any trade, investigate and make sure that you have a good entry and a good exit plan. The next mistake most people do is chasing the hype. Many beginners fear of missing out, and they bring this into trending coins after a huge price increase. They buy at the top, only to see the price crashing down soon after. How to avoid this? Don't buy a coin just because everyone is talking about it. Do your own research, that is DYOR, before investing. Don't listen to online this thing that's saying do this, do this, do this. No. Sit down, understand the market. Don't listen to what they're saying. You trade your own star. You must have your star. That is what I see there. You must have your star for you to be able to make a good decision in the market. So don't buy a coin just because everyone is talking about it. Then do your own research before investing. Wait for a price correction before entering a trade. The best trades buy low and sell high, not the other way round. So when the trade is down, the bottom line, the coin, the trading, the price, then you buy so that it will go up. Then when it is at the top, you sell so that it will come down. Now, the next thing we want to look at, that the next mistake most beginners and most experienced people sometimes make, is not understanding market trends. Somebody said, the trend is your friend. Beginners often enter trades without checking market trends. They buy when the market is overbought or sell in a bullish uptrend. How do you avoid this? Learn to read charts and indicators, e.g. RSI, moving averages, MACD. Trade with the trend, not against the trend. Then follow crypto news and market updates to stay informed. The trend is your friend. Don't trade against the trend. So if the trend is uptrend, let it have a particular retracement, then you enter the uptrend again. Not that when it is already up, then you are buying again, then it will retrace. And that retrace may hit your stop loss, then it will continue to bounce up again. Number 5 mistake is using too much leverage. Leverage lets traders borrow money to trade with more than they actually have. While it can multiply gains, it can also wipe out your account quickly if the market moves against you. How to avoid it? Start with low leverage, that is 1 to 3 times if you are a beginner. Use stop loss orders to minimize risks. Never risk more than you can afford to lose. I don't know this statement. I'm still thinking about it. How much can I afford to lose? I cannot afford to lose anything. But that is the statement in a market situation. Are you saying that if you have $1,000, you can afford to lose $2,000 and $200 out of it, or you can afford to lose $10 or $100 out of the $1,000? No, I cannot afford to lose anything. So, bet in forex or in crypto, it is said never risk more than you can afford to lose. That means don't lose what is making you to start crying. Leverage is a double-edged sword. Use it widely. So the leverage can be used for you, and it can also be used against you. Trade smart, not hard. Crypto trading can be highly rewarding, but only if you avoid common mistakes. Here is a quick recap. Number 1, have a solid trading plan. Use risk management strategies. Avoid chasing hype and FOMO. Follow market trends and analysis, then use leverage responsibly. By following these tips, you protect your capital, you make smarter trades, and increase your chances of success. Do you want more expert crypto trading tips? Subscribe to Dr. Olugbenga Adetitun YouTube channel for daily insights, real-time signals, and trading strategies to help you profit in crypto. Turn on notifications so you never miss an update. Happy trading. So this is where I'm going to stop on this video for now. This is how people go into the trade and how some miss out along the line. Don't trade more than you can lose. Have a good risk-reward ratio. Your risk-reward ratio can be 1 to 3, so that if the loss calculation is going to be 1, then your reward should be 3. Your profit should be 3. Or sometimes some people use 1 to 2. Whether you're using 1 to 2 or 1 to 3, if you can get more than 50% or win more than 50% of the trade, you are going to be in profit. So use your strategy. And then I must add this success tip or this extra tip for you. Some people, what they do is that they overtrade. You open one trade with a small capital, you open one trade, you open 2 trades, you open 3 trades. Don't do that. I recently resumed trading after a long time break, and as I started trading, I made sure I didn't enter more than 1. The temptation came, the urge came, enter more. Now I was in sell, but it was buying. The urge came, enter more sell now, so that I say no, I still there. Problem is that when you enter more sell and it kept on buying, it will eat deeper into your capital, and then you'll be forced to do what? To close the trade. But because it was only 1 trade I entered, I did not close the trade, because what that trade was eating was not going to affect my capital so much. Did not reach a percentage of what I was set as stop loss. Eventually, what happened? It bounced back and it eats profit for me. So I want you to also to profit in the crypto space, crypto trading this time. I'm going to see you in the next one. This is Dr. Olugbenga YouTube channel. Like this video, subscribe to this channel, and share the link of this video with your family and friends. If you have questions or comments for me, drop it in the comment section below. I am going to bring you other videos and other tips for forex and crypto trading and other businesses that you may think of. If you have specific needs or a particular business or a particular concept or a particular money-making venture you want me to talk about, let me know in the comment section below, and I will research on it and bring you information and content about it. So until I come your way in the next one, this video popping up by the side is the next you need to watch. This is a channel where I teach you how to make money online and offline. Go ahead and watch this next one, and you are going to be glad you did. I am sent to you. You will make it. See you in the next video.